do a little bit of housekeeping here. We are recording this presentation, so for those of us who can't join live today, we'll be able to share out a recording afterward. And you can type questions for any of the panelists that are appearing today into the chat bar, and we'll try and answer those questions as we go. We also have some time at the end for a Q&A session, so please don't be shy. We're happy to engage in dialogue and answer your questions about the program. Go ahead and advance the slide, please. So this program, the Appalachian Solar Finance Fund, has been awarded a $1.5 million award by the Appalachian Regional Commission's Power Initiative. And this is a program that targets federal resources to communities that have been affected by job losses in the coal industry. So we're really grateful to ARC and their generous support for this program. And that catalytic funding has been matched by additional support from the Appalachian Investment Ecosystem Initiative, the Claude Worthington Benedum Foundation, New York Community Trust, Educational Foundation of America, Virginia Coalfield Economic Development Authority, and some other pending sources. So we are very grateful to all of our funders for supporting this work, and thank you very much for helping to make this program possible. Advance the slide, please. So you'll be hearing from members of the Solar Finance Fund team today. Again, my name is Autumn Long. I am the project manager with Appalachian Voices. You'll also be hearing from Adam Wells, Appalachian Voices Regional Director of Community and Economic Development, toward the end of the hour. You'll hear from Hannah Vargason, the Associate Director of Strategic Initiatives at Partner Community Capital. You'll hear from Andrew Crossan, CEO of Invest Appalachia, and from Mark Palmer, co-founder and CEO of New Resources Solution. We're all working closely together to develop and implement and manage the Appalachian Solar Finance Fund, which is housed within the Central Appalachian Network's Clean Energy Working Group. You can advance the slide, please. So I'll talk briefly about the goals and objectives of this program. Ultimately, the Appalachian Solar Finance Fund is working to catalyze new solar projects in coal-impacted communities across Central Appalachia. And we're doing that by deploying a targeted set of financial tools that are designed to unlock these solar projects that are facing barriers that are unique to our region. And the ultimate goal of this work is to promote economic recovery and diversification in communities across Central Appalachia that have been impacted by the decline in the coal industry. So these solar projects will produce new employment opportunities, new business development, investment, and wealth retention in these communities that have been impacted by the coal economy's decline. We'll be investing in Appalachia's nascent solar industry and helping to get that very quickly growing industry up and running in Appalachia. And we're also lowering energy costs for local institutions and nonprofit organizations and businesses. Those cost savings will be reinvested into expanded services and local business growth and increased wages for workers throughout the region. Can advance the slide. So what is this region that I keep referring to? The Appalachian Solar Finance Fund serves 147 coal-impacted counties across 6 states in Central Appalachia. And you can find a full list of those counties that are eligible for our funding at our website, solarfinancefund.org. The geographic eligibility criteria is based on the Appalachian Regional Commission service area, as well as their definitions of coal impacted and distressed or at-risk counties. So that's how we've created this geographic eligibility criteria. In addition to the region that we're serving, we're also serving a certain range of categories for solar projects. And we're targeting nonprofit organizations, public institutions, and local commercial businesses that serve as community anchors in their local communities. So the types of entities that we're talking about funding here are public institutions like schools, colleges, and universities, local governments, municipal fire and rescue stations, homeless shelters, faith institutions, and any other NGOs and local nonprofits that are community institutions in their local communities. On the private side, we're able to offer assistance to private businesses like private schools, medical facilities, childcare centers, subsidized housing institutions, local Main Street businesses and manufacturers, and other commercial entities that serve as anchor institutions in their communities. And we're really, our goal here is not just to help lower costs for these institutions to go solar, but to ensure that the benefits of solar impacts the community and the populations that these entities serve. So when you're thinking about applying for solar project support through the Solar Finance Fund, that is something to keep in mind, that we're really centering community benefits, and we want to understand how your solar project will help benefit your community and the population your institution serves. So with that, I am going to turn it over to my colleague, Hannah Vargason of Partner Community Capital, to talk more about the types of support the Solar Finance Fund is offering. Take it away, Hannah.
Thanks, Autumn. Hi, everybody. Thanks for joining us today. So I'm going to talk about what we're actually doing with these dollars. We have various strategies in place, but really two mechanisms for deploying these dollars to eligible applicants. So those are subgrants and contracts for technical assistance. Subgrants can be used to support pre-development costs or to offset the actual project costs in lieu of incentives like the solar investment tax credit. Contracts for technical assistance are contracts that we put in place that can also be used as a part of the pre-development process to support the project developer or to create new innovative financing models. So that means we can pay for consultants or professional service providers like lawyers and accountants to help put those projects together or new models together. And at this point, because the Solar Finance Fund, as you've heard, has been seeded by federal dollars from the Appalachian Regional Commission, subgrants can go to nonprofit and public entities only, but private companies can also receive technical assistance, and nonprofits and public entities can receive technical assistance as well. But our intention is to grow the fund and our capabilities along with that. So stay tuned to how the Solar Finance Fund grows and evolves, and we can do more. And then in addition to these sort of two mechanisms, subgrants and technical assistance, we can facilitate connections between project owners or developers with lenders and third-party investors as well. So that's another sort of service that the Solar Finance Fund offers. And we'll go to the next slide to talk a little bit more about how we decide who gets funded and how much. So someone or shortly will walk you through the actual application and deployment process, but I just want to speak to additional criteria beyond the basic eligibility criteria that Autumn mentioned, the things that we're taking into consideration about where to invest and how much. So This first point is really about timing. We want to get dollars into the ground or onto roofs, so to speak, as soon as possible to help accelerate the industry development as soon as possible, likewise. So being an overarching goal of this work. Secondly, we want to maximize yield. So we want the Solar Finance Fund dollars to unlock other dollars and create but-for investments. And the more the better, of course, in terms of leverage. And furthermore, just like really driving home this idea of additionality, that we want Solar Finance Fund dollars to do what other dollars can't do and bring other investors to the table. So furthermore, we want the projects to have impact, in that we want to support projects that create impact that's felt locally. So whether that's building wealth in the community in terms of who, how the ownership is structured, or whether it's supporting a local leader like these anchor institutions that Autumn described, those organizations or entities that will then bring other critical products or services to their communities. That's the kind of stuff that we would want to support and would go into our consideration. In terms of how much, we are scaling our investments up to approximately 26%, which of the project cost, which is in alignment with the solar ITC, federal tax credit. And it's flexible. It is sort of on a sliding scale based on whatever investment is needed to really create that but-for, catalytic investment. So we encourage applicants to use all of the other tools available to you, sort of based on your market. If you're in a state that can use a PPA or a lease, we encourage you to look into those, or we can help you look into those as well. Like I said, make those connections with investors, but kind of turn over those stones and then see if there are gaps beyond that the Solar Finance Fund can fill, and really like get projects over the finish line that would not otherwise advance. So those are our goals, and for how the money actually gets allocated, and of course having a little bit of diversity across the region. So with that, I think it goes to Autumn or maybe Mark.
Turn it over to Mark of New Resource Solutions next. Thank you, Hannah.
Yeah, thanks both. So yeah, I'll talk a little bit about the types of projects that we support, and just a little bit more detail into how we evaluate project funding opportunities. So as part of project underwriting, project readiness and impact threshold metrics ensure that these Solar Finance Fund finance projects are investment ready and highly probable to result in finalized transactions or more solar. So that's what we're really excited about, is we want to make sure we're issuing dollars that to projects that are ready to build and that they're going to result in more solar. We prioritize a few different criteria during the application review. We look at deployment readiness. So how far along is the solar project to actually being realized and constructed, for example, or is there a bunch of roof work that needs to be done before the solar project can get built, or a new building or something to that extent. Catalytic capital yield, Hannah mentioned a little bit about this, of the impact of how many dollars does a dollar of Solar Finance Fund funding unlock as part of the but-for opportunity and getting new projects built that wouldn't otherwise be constructed. Local community impact. So is it going to be visible? Is it helping an organization that's an anchor community organization that can help spread the word that solar is possible in this region, and that it is an economically viable option, and that it should generate more job opportunities in the area for solar installers. And then geographic diversity. So just making sure that all of the money doesn't go towards West Virginia or Ohio or Kentucky, but it's spread out, not necessarily, doesn't have to be equally, but at least spread out across the region, so that the whole region benefits from the work we're doing. We have an incredibly diverse set of projects that we've already approved for funding. You can see some of the logos on this page, and hopefully the applicants will tell you the process was fairly quick and painless. I'll walk you through a few examples in case it's helpful to envision other organizations that that may fit for to apply for funding here. So one would be a large church in West Virginia with on-site daycare and a food distribution facility. This is a 450 kilowatt project. It's a rooftop array, and the Solar Finance Fund provided funding to ensure that the church saves money on their power bill going forward, and to help lock in a price before some of the supply chain issues that have popped up and equipment costs go up. A community nonprofit in West Virginia that provides housing support and nutrition assistance and educational programming to youth and seniors and low-income families. That's a 70 kilowatt rooftop system, and we provided support to offset the value of the investment tax credit that wasn't able to be received by this entity because it's not a private for-profit entity. A couple others, a community event venue in Kentucky, a 30 kilowatt solar array, and we provided technical assistance support to help cover the cost of permitting and interconnection application and some electrical work. A nature-based learning institution in Ohio that's really, pretty small. It's just under 10 kilowatts, but they had all the funding for the system needed and is applying for a REAP grant that could provide the balance. However, whether or not that REAP grant comes in dictates whether or not the project will be able to move forward. So we provided a backfill for the REAP grant. So to the extent the REAP grant isn't approved or they don't make the cut of the, of all the applications that are filing for REAP grant funding, the Solar Finance Fund will cover that. So the applicant can feel confident and the installer can feel confident in the work and the solar project getting built. And then lastly, a no-kill animal shelter in Marion County, West Virginia, where again, we're providing funding to help offset the ITC that cannot be realized due to some challenges with the ownership structure and the nonprofit entity nature. Next slide, please. Thank you. So we're really trying to make the process for applying and receiving grant funding simple and straightforward. So for projects that have a fairly clear path to being built, the review process typically lasts anywhere from 2 to 4 months from the time the application was submitted. And that really just ebbs and flows a little bit with when our review committee meetings are scheduled and other applications that have come in the door. Here's how simple it is to get funding from the Solar Finance Fund. So first, you apply online. It's about a 5-minute questionnaire. And applications can be completed by either property owners or solar developers or installers who are looking for ways to help, provide additional funding for their host for on-site solar. We won't engage in detail until a quote has been provided by a solar developer or installer. So that's definitely a filter that we use before we really start to dig in and look to vet the funding. But we are happy to make introductions, as Hannah mentioned, if a property owner doesn't know where to begin or they don't know a solar developer or installer in the region to communicate with. And then assuming it fits in our box, which mainly gets filtered out due to project size. And so either utility scale or residential projects do not fit. This is a commercial C&I focused fund for solar projects and geography. So just making sure it's in an eligible county. After that point in time, you'll work with mainly with Autumn and myself on some Q&A so we can learn more about the project, why funding is needed, et cetera. I often focus on the deployment readiness, funding need, and recommending how much funding may be warranted so that, the but-for nature of how much needs to make sure the applicant or the host is saving money without, we're not intended to be a padding the pockets of everybody involved in an otherwise viable project. Autumn will focus often on the local community impact and the geographic diversity, and we both kind of bounce back and forth as well. After some Q&A over email and maybe a call or two with us and the host or the installer, then we're typically ready to take it to the review committee for approval. We discuss the need and fit and amount of funding and any contingencies and timing, and ultimately approve or go back to the applicant with why it's not approved or what it needs to get approved. Assuming it's approved, then you'll work with Autumn typically on some of the specifics that are memorialized in just an MOU, a memorandum of understanding about, here's the amount of funding that we anticipate granting. Here are the obligations that we'd expect from you as the applicant. and here's when we expect to be able to issue that funding. So for example, if you need roof repairs prior to getting the solar installed, we may make that a contingency to the funding so that that's completed first. And then as the funding gets closer to happening, the applicant enters into a sub-award agreement with the Solar Finance Fund. Autumn, correct me if I'm wrong, but I think basically it says, I haven't deceived you, and I'll be glad to report on project status and outcomes regularly moving forward. Pretty straightforward. There's no gotchas in there that we're looking to provide. So anyways, that covers the process. So, we think it's pretty straightforward and simple, and we try to make it easy on the applicant. And really, we're just, asking some questions to learn more about the need, why they applied, and a little more details about the solar site that's going to get built with our help.
Thank you, Mark. And I'll just add and reiterate that the property owners or the institution leaders who are wanting to go solar on their building or their property can complete the application form, and as can solar developers who are working with property owners to complete these projects. We just require that, someone from the institution as well as the developer is going to be available to work with us to answer questions and to provide some continued reporting on the impacts that the project has for your organization or institution, as well as your community. So I will be following up with everyone involved in the project on both the developer side and the property owner side. But I'll make it as painless as possible for everyone involved, I promise. And with that, I will turn it over to Andrew Crossan of Invest Appalachia to talk more about how the Solar Finance Fund fits within the larger investment ecosystem for solar projects. Take it away, Andrew.
Exactly. Well, thank you, Autumn. You stole my first words, so that's a good sign. Obviously, everybody's on this call because they're interested in the Solar Finance Fund in particular, but it's probably safe to assume that everyone on this call is also interested in the growth of the solar industry in the Appalachian region. And we've been talking about SFF, which for now in its current iteration is providing a source of funding that is one small but important piece of the overall capital stack for solar development. But SFF's goal is really the overall growth of the regional solar industry and the growth of a solar industry that's oriented towards community benefits. So SFF has a holistic interest in project development, as you heard from the sort of things that Mark is thinking about. We're looking at the role that SFF plays in a project, but we're also thinking about the other elements of that quote unquote capital stack for solar development. So a capital stack, it really just means the sources and terms of capital that flow into a particular project as investment for that project. So a capital stack could look any number of different ways. This is generally what the components of a capital stack might look like for a solar development project. Most projects are going to have at least the top two here, which are the market rate sources of investment. But in low-income communities or emerging markets like Appalachia, it becomes really important to have some other sources and forms of capital that are more flexible, that are mission-oriented, and that are risk-absorbing. So at the very bottom of this inverted pyramid of capital are grants. So grants are obviously the least repayable and the most concessionary or philanthropic of all the sources of capital. They can be really important for aspects of a project that might be focused on community benefits, might have other elements that are not suitable for repayable investment. The next level up from that is what we've been hearing about here, the Solar Finance Fund. So, again, it's a small portion of the overall capital stack in terms of the percentage of dollars, but really important because it is providing incentives and offsets that are not available otherwise. And as Mark referred to, the but-for nature of those incentives and offsets means that they can make things happen that wouldn't have happened otherwise. So another thing about SFF is that it's grant dollars, but they are very explicitly and intentionally tied to the project's launch and to other sources of investment. Moving up one more level, there's a category called credit enhancements. And credit enhancements are a part of the Solar Finance Fund's overall vision. We refer to it as Solar Finance Fund Track 2 or Phase 2. Right now, that role is being filled by Invest Appalachia. So Invest Appalachia, which is the organization that I represent, provides investment funds, but also provides this category of investment called credit enhancements. And credit enhancements are this weird in-between category of capital where it is risk absorbing. It's explicitly designed to be able to fill a gap in a capital stack, but it is intended to be repayable. So it's not going to have the repayment terms that you would get from an equity investor or a lender or a bank, but it's also not grant dollars that are just meant to be absorbed into the project. It's meant to help plug gaps that actually address the underlying math of the investment, that address challenges related to collateral or to the risk of a project or perceived risk, or the affordability of the project. So the cost of the capital going into the project. I'll talk more about what those actual forms take on the next slide. But then the next level up is owner investor equity. So this could look a lot of different ways depending on the nature of the project, and in particular, the entity or ownership structure. So this might be the owner operator putting in their own equity. It might be third-party owners, such as a power purchase agreement, it might be investor tax credit investors. And then there's also other emerging and innovative ownership structures that Solar Finance Fund is really interested in helping to foster and facilitate in the region. We have some national partners that the SFF has had dialogue with. We're really interested in helping to grow the solar industry in the region, specifically around community involvement, community ownership, and community-oriented investment. So where a project has some complexity, the SFF can also help to pull in experts who can help to navigate that complexity. Think about multi-party ownership structures or community benefit agreements or things like that. The top tranche of the solar capital stack is generally the construction and operating financing. So these are loans that are usually secured by assets or collateral, have specific terms for repayment. And this is usually the majority of the dollars going into a particular solar deal. Sources of that, in a market that's well established, banks will often be able to do this. But in an emerging market like Appalachia, this is more likely going to be CDFIs, which are mission-driven lenders whose purpose is to serve community benefit and provide financing for community projects. The Invest Appalachia Fund is another source, and there are other non-conventional lenders who are motivated to provide financing to solar projects. So just want to note that this is a lot. Some projects won't know which of these pieces of the capital stack they need until they really start digging in. SFF really wants to make itself available as a resource to help people navigate these different sources of capital. So you don't necessarily need to have your entire capital stack figured out when you come to SFF. Autumn and Mark can help you diagnose what you've got, what you might be lacking, good sources of capital. So come to the SFF with what you have, and the SFF can help to make referrals and connections to sources for these other elements of the overall capital stack. Next slide, please. So these are the phases of solar development. So the last slide was sort of the sources of capital based on terms. These are potential sources of capital based on phases of development. Generally, a solar project is going to have three overarching phases: pre-construction, which is all of the planning and pre-development, permitting, things like that, before a project actually gets underway. Construction, which is when you actually break ground or begin installation, and you have contractors on site and materials. And then operations, which is when a system is placed into service, it requires ongoing financial considerations. So at each stage, there's different sources of capital that have different terms to them. In the pre-construction phase, grants are often very important, especially if it's a community benefit project. So there are federal sources of grants. There are private sources of grants. So funders, particularly the members of the Appalachia Funders Network. There are many local and community and regional foundations that are interested in these types of projects. So if you have a project that you think has strong community benefit, it might be a good fit for a grant in this pre-construction phase. And some solar finance fund incentives actually can be used during this pre-construction phase, oftentimes, as you heard, tied to a contingency around that project actually moving forward to implementation. Short-term loans are sometimes necessary or helpful here, but they can be tough. Tough to secure because oftentimes there aren't assets to lend against, right? So there's not the existing collateral or assets. So that makes credit enhancements really important at this phase. So if you're seeking a loan, but you don't yet have the system or you don't have a building or something else to put up as collateral, then credit enhancements can become really important. That could include an unsecured bridge loan, which offers some upfront working capital for a project, or a conditional repayment loan, which is where the loan is structured so that repayment is triggered by a certain revenue or profitability or cost savings benchmark. So you only repay it if the project is successful or hits certain goals. And then lastly, loan guarantees and loan loss reserve. So if you are seeking a loan, but you don't have collateral to back up that loan or secure it, these are funds that can be set aside to guarantee that loan or to reserve funds for that loan to allow you to actually access financing from a lender. So these are all products that Invest Appalachia offers in complement to the Solar Finance Fund. The next phase of construction, there's still some grants that might be relevant here, including the USDA REAP grant, which we heard about earlier, utility rebate programs, and then this is where most of the Solar Finance Fund incentives are going to come into play, right? They're helping to actually offset or bring down the costs of actually implementing the project. Short-term loans are available here as well. Construction loans are a common source of financing or form of financing, and you can get those from conventional or non-conventional lenders. But again, oftentimes you won't be able to get that financing because you don't have the collateral or the assets in place, or because lenders just aren't super comfortable with solar projects in many cases. So again, credit enhancements might be helpful. The same three forms of credit enhancements might be relevant at this phase of construction. And then lastly, in the operations, this is where you're most likely to be able to access longer term loans. So banks and other conventional lenders might be able to lend for the long-term operations of a project. Non-conventional lenders like CDFIs might be able to help with this ongoing or permanent financing. There's also third-party ownerships, including power purchase agreements, commercial institutional solar investors, high net worth individuals, and then mission-driven entities. I mentioned that we have relationships with national organizations that are really interested in creative, innovative, community-first ownership models and structures. So if you have a big, complicated project that has a lot of community benefit, it might be worth exploring what some other structures are for the ownership and operation of that solar development. So the SFF can help to connect to those actors if the project is a good fit. And then lastly, credit enhancements can still be helpful at this phase. So if you have ongoing financing, but again, the financing requires some additional collateral, a loan guarantee or loan loss reserve might be helpful. If the cost of the capital, so what a lender, a CDFI or a bank can afford to offer, so say the interest rate that they offer is too high for the project and it just won't cash flow, then we can offer something called interest rate buydowns, which are low or no interest loans that help to bring down the overall cost of capital for the project. So making it more affordable to the borrower and allowing the lender to be able to provide their financing into the project. And then lastly, conditional repayment loans, which again are loans that are repaid based on benchmarks or milestones that the project achieves around profitability or revenue or cost savings. So again, this is a lot of information. We don't expect you to retain all of this, but the takeaway here is that the Solar Finance Fund can be a resource to help you navigate these other sources of capital. Solar Finance Fund wants to see investment flowing to solar in the region and wants to see more deals getting done. So we're happy to help you all navigate these additional sources of capital. I think that's it for me.
Thank you, Andrew. And finally, we're going to hear from Adam Wills, who's going to talk about a very cool and related initiative focused on workforce development that we're simultaneously deploying as part of our Solar Finance Fund programming. Go ahead, Adam.
Thanks, Autumn. Hi, everyone. I'm also going to attempt to address the question in the chat roll that's been going around environmental justice. So we'll see how well I fold that in here. So we've set up the Solar Finance Fund to be flexible and be responsive both to the needs of communities in the solar industry, as well as to emerging opportunities that come up. As I think Hannah mentioned in our different strategies, one of those is coming up with new strategies, and that's baked into the DNA of the Solar Finance Fund. And so one of the ways that we are already doing that is through this Southwest Virginia Solar Accelerator. Thanks to a generous grant from the Virginia Coalfield Economic Development Authority, we have a set aside that is managed within the Solar Finance Fund that is specifically earmarked for the coalfield counties in Southwest Virginia that VCEDA, the Coalfield Development Authority, serves. And that funding is being flowed through the community colleges, both Mountain Empire and Southwest Community College, which serve the region. And then it goes through the Solar Finance Fund and out into the world where it can do its work. And so what we're doing with these particular funds is paying for paid on-the-job training for high school students, community college students, or transitioning workers to be paid to learn how to do solar, as well as have credentialing paid for that is provided through the community colleges. The funding for Mountain Empire has already been earmarked for a couple of specific projects that we'll announce soon, but the funding is still available through Southwest Community College. So for folks, my neighbors and friends in Southwest Virginia, that's the counties of Russell, Tazewell, Buchanan, and Dickinson County that Southwest serves. So if you're working on projects in those counties, we want to hear from you. So that's one example of kind of an innovative set aside or sub project within the Solar Finance Fund. Another one, and this is getting into the environmental justice, is we have applied for and are hoping to receive funding for a pilot program that would provide support directly to buildings that are owned or that are controlled by via a nonprofit board, Black, Indigenous, or people of color groups. And so, as I think Hannah mentioned in the chat roll, we're thinking about all of those factors about environmental justice and making sure that these funds go to the places that are most needed. That's in our consideration, but we don't have anything specifically at this point that says that these dollars must go to any particular group or building owner. So that funding would allow us to do that. And there's some funds in there to figure out how we do that in a thoughtful and appropriate way as well. Another thing that I'll mention is we've got another pending application through an NEDA regional application to infuse additional funds, both in West Virginia. Most of them will go through West Virginia, but then some of those funds will be available at large. And those funds would be split between what Andrew just finished talking about, that track 2 or credit enhancements, as well as juice up the existing free money or track 1 that we'll talk about. So those are 3 things that we have kind of on the radar right now in terms of these innovative sub funds. We're open to more. If you've got an idea or funding to make one happen, we would love to hear from you. And then while I've got the mic, speaking about environmental justice and how we make sure that these funds to go to where they're needed, when we go back to that map of Solar Finance Fund eligible counties, all of those counties are designated coal impacted by the Appalachian Regional Commission. The vast majority of those are also designated as distressed or at risk by the Appalachian Regional Commission. So within our target geography, most of the communities are rank high or low depending in economic and socioeconomic distress factors. It's no accident that that's happening because of the legacy of the coal industry, as well as prohibitive policies from the utilities. As I think Adam Blasier, I'm probably saying that wrong, mentioned in the chat roll, the utility policies in these communities tend to be more restrictive for distributed energy. That's something that we've certainly encountered in Southwest Virginia. And it's a common theme across Central Appalachia that shows up differently depending by the state and depending by the utility territory. And that's really the power of us collaborating through the Central Appalachian Network. Many of the organizations in Central Appalachian Network are running into these same problems. And through the Solar Finance Fund, we're able to develop this tool that we each can use in our respective states, deployed a little bit differently, but that is thematically addressing those kind of root inequities around distributed energy. So Mike, hope that at least partially addresses your question about environmental justice. It's a really great question. I'm glad you asked it. With that, I think that takes us to Q&A. Autumn, are there any other questions in the chat that we should address at this point? I haven't been looking at it in a minute.
Well, I've been doing my best, and the rest of the rest of the presenters have been working to answer questions as they come up. So thank you all for posting questions in the chat. Um, are there questions that we haven't answered or follow-ups that anyone would like to ask? Oh, I see a new question come in from Chris Jones. Does PACE financing have a role, or is that being discussed? Hannah or Andrew, would one of you like to speak to PACE at all? No.
Yeah, I'm trying to think of where it has been enabled overlapping with the geography. I mean, conceptually, yes, like we could participate in a PACE project. Chris, can you speak more to where you're located? And if it's enabled in your region?
Yeah, I'll just follow up. Kentucky, Virginia, and
Yeah.
Ohio. See
Yeah.
PACE is enabled.
Yeah. So we haven't seen any applications yet, I don't think, right, on Mark, that are including PACE financing. I mean, if the Solar Finance Fund investment were critical to getting a PACE lender on board, I think we could absolutely do it. And then the TA would be a no-brainer as well. Like anything that would be pre-development to make that project happen would make sense. So yeah, I don't see any problem dovetailing with PACE financing.
Yep, I agree. PACE can be a really valuable tool and, financing option in areas where that's enabled. So we'd be happy to consider working with projects that are, considering PACE financing. And, as long as the financing makes sense for your project and leads to cost savings for you as a customer, we encourage you to seek innovative financing solutions, and there are a lot of those, as Andrew spoke to, in the region that we can help connect you with as needed. We've got a question from Janet Keating. Are there any projects that might concern solar microgrids to increase resiliency in communities impacted by a major storm, et cetera? Great question, Janet. And microgrids are definitely something we're interested in supporting. And in some states where there lacks, net metering, solar plus storage is really critical for projects to capture the value of the energy that's being produced by their solar arrays. So we're seeing a lot of solar plus storage projects being deployed in states like Kentucky and Tennessee, where they've really got to keep and capture that energy on site. And yes, so community resilience would absolutely be prioritized in terms of our evaluation of a project's benefits for the local community. And we would love to see some, municipal or private or public microgrids come through the pipeline. And yes, the follow-up there from Jeff, are projects that include battery storage allowable for SFF funding? Yes, and those projects do come with significant additional costs than just a grid-tied solar array. So we anticipate solar plus storage projects are more difficult to pencil out financially for the customer, and that's a case where we can help make that work. All right. And we've got a question from Adam Blazer. Sorry if I'm mispronouncing your name. For multidisciplinary projects like solar lighting controls, can your finance partners expand their reach to cover more than just the solar scope? SFF assistance would be limited, but things like lighting, retrofits, et cetera, can drastically improve ROI. I feel like the answer is yes. If you're financing a project that includes solar plus efficiency or energy services, that's something that financial institutions are happy to consider, and that we would look at the solar piece of it for solar finance fund support, but our financing, partners and other lenders, I think it's very common and probably encouraged to consider a holistic approach to like building upgrades and energy performance.
Yeah, and I would go a step even further, Autumn, and say that if there's projects where solar is a part of the project, but might not even be the lion's share of the investment needed or the project itself, that's great. And that's, lenders, including CDFIs or the Invest Appalachia Fund, would be interested in the holistic package. The Solar Finance Fund could plug into the solar component. You can still start with the Solar Finance Fund as an entry point, and the Solar Finance Fund can help to connect to other sources of investment that would consider that holistic package of capital needs. So solar is not in a vacuum. We recognize that, and the investment solutions shouldn't be either.
Yeah, and there's also examples of projects that we've approved for funding that are new construction, and so those are like construction loans, the solar piece of which are part of that larger financing deployment. So we'll definitely just take into consideration your specific situation and needs, and we have the ability to be really flexible in those considerations. Yes, as Adam said in the chat, if you're wondering whether we will consider it, go ahead and hit us with it and we'll let you know. Like, we want to hear what's going on and we want to support everything we can with the limited funding pool we have available, and which we hope to continue to grow. Are there other questions from attendees that we haven't addressed, or anything we can help answer or discuss in the remaining several minutes we have in the hour?
Autumn, did we talk about the overall timeline of the ARC grant, and at this point, our timeline for the funding that we have?
I did not talk about that, but I'm happy to speak to that since we have a few minutes. Our ARC funding operates within a 3-year timeline. So this project launched in November of 2021 and will be continuing through the fall of 2024. So we effectively have like 2.5 more years within our ARC program deployment to support projects with that pool, that catalytic pool of funding from ARC. And as we're, developing new partnerships with other funders and project partners, I think it's all of our hope, certainly mine, that we can extend the timeline and the scope and the breadth of this work to create an even more, like a more sustainable and long-term program where we can really serve as like a clearinghouse to help solar projects throughout the region connect with financing and lending institutions and figure out those sticky questions to make projects viable. Sorry, I kind of took that in another direction, Adam, but that was rounded up.
You answered the question plus some.
Yeah.
Yeah, Autumn and Adam, I'll chime in and just note that while that is the horizon, it's also when the funding runs out, as I understand it. So if we deploy all of the capital sooner, and I think we're on pace to not have it stretch out to 3 years, I think we're deploying at a quicker rate. While we hope to find ways to continue, expanding and offering, more of this type of support. It's a first come first serve basis, and so it doesn't mean it'll be here in 3 years or in 2.5 years as well.
Right. Thanks for that color, Mark. We had a question in the chat from David. Does the project have to end by fall of 2024 or be started? And Mark has somewhat spoken to that in mentioning that, we're drawing down this pool, and so it may go quickly. We generally are looking at timelines of like a 6-month MOU. That's like our standard timeline for projects that we've awarded, that we've approved funding for. And so we would really like to see, the rest of the financing get lined up and contracting get squared away within, for the most part, 6 months within our funding approval. And then after that funding is awarded, we would want to see the project completed. Generally, we would like to see that happen within like a calendar year of its the contract being awarded. I understand that sometimes things take longer than that, depending on the size and complexity of projects. So again, we can be flexible in our expectations of the length of projects, but we do, we're going to make sure we have regular check-ins with the folks that we're working with, and that we're getting reports back from those projects to ensure that progress is being made in a timely fashion. And finally, we had a question from Sydney about addressing innovative financing arrangements that use proprietary methods. And if this is proprietary like financing models or proprietary technology. Hannah had a follow-up question for you on that. And I think that the overall answer would be that, we can work with you and ensure that, proprietary information is not disclosed, and be careful to, sign NDAs or keep things, private as needed. And this is a proprietary technology. Okay, interesting. I mean,
Yeah.
It's something we'd like to learn more about, maybe.
Yeah, for sure. I think the only thing that we would be looking for in terms of, and this is just overall, is that, the project is feasible from every angle, including a technological one. And so that the technology is proven in some way or fashion, even if it is innovative. So yes, definitely an opening there.
We wouldn't be in the position to provide like R&D funding for, a new technology that's like undergoing, just like research and development. That's not really the type of project that we are funding through this program. As Santa said, we would, want to ensure that it is like a viable, proven technology. Any other questions from our attendees today? Or thoughts from the group? Well, I'm going to go ahead and suggest we wrap things up a few minutes early. I love being efficient and having a few minutes back at the end of an hour webinar. So thank you everyone for being so efficient in your delivery of your remarks, panelists, and for everyone who attended. We appreciate you spending the time with us. We will circulate a recording of the webinar afterward, and we will post that recording link on the website solarfinancefund.org. You've got that link on the screen, as well as my contact information. Always happy to follow up and answer questions and learn about new projects. So please do consider applying. And we look forward to reviewing some new applications coming in our pipeline soon. Tell your friends, tell your colleagues. We're excited to help deploy more solar in Central Appalachia over the next couple of years. So thanks everyone, have a great day.